Hi friends, how are you? By blessings to God, you are doing well. So this is Dr. Arthanjana, faculty member, PGT Department of Business Management, Pakirmani University, Vyasavir, Balasur, Odisha. Friends, once again I am welcoming to all of you to your channel, to my channel, Dr. ABJENACLASSES. So friends, from the thumbnail, friends, you have already known आज का discussion क्या है friends. So friends, today we are going to discuss the very interesting as well as that is the vital, that is the video content. It's the principles of insurance. In a previous video friends, we have already discussed that is the different types of insurance. So friends, so far today's discussion is concerned, today's discussion will be very useful and fruitful, particularly that is the board, I mean that is the 12th board, I mean the commerce as well as the commerce management and other related subject. And finally, today's discussion will be very useful and fruitful, particularly those who are preparing for the ugc-net JRA for the subject of commerce and management, as well as so this video content will be useful and fruitful, particularly those who are preparing for the assistant professor. So that's why today's discussion will be very interesting. So friends, I am requesting to all of you during the discussion, if any mismatch or gap you find, kindly give your valuable comment and suggestion in the comment section. So friends, we will discuss by explaining in simple language with the suitable example. So friends, it's the chota sa video content. Stay with me from beginning to till end. So before discussion, friends, I am wishing all the very best for your upcoming, not only the board, semester and other exam. For discussion of the principles of insurance, so let's say we have to know what is the meaning or the definitions of insurance. So insurance is a cooperative device to spread the loss caused by a particular risk over a number of people who are exposed to it and who agree to insure themselves against the risk. So why I am talking about? So it's the insurance is regarded nowadays, it's the whether that is the life insurance or the general insurance, let's say you can say, or we can say, yeah, so it's a that is our a good friend, or you can say the better friend, or you can say the best friend at the time of a financial need, or at the time or to in about the risks. So another definition, insurance, it's the insurance may be defined as a form of contract between two parties, where by one party is the insurer, I mean the insurance company. So friends, we will also discuss in this video content the various terms which are used frequently in insurance. Agrees to compensate the other party, insured matlab who, the policyholder, against the loss which may or may not arise in future against the payment of a consideration. Consideration matlab friends here premium. So friends, I am hopeful that so you knew the meaning or definitions of insurance. So insurance is a process in which the uncertainties are made certain. So this definition has been given by the, so it's a well known, that is the general definition, the McGill. So friends, you have to remember either this one or this one or this one for the board as well as the semester exam. So you will get that is the short question, I mean 1 or 2 mark questions. So thus insurance is a cooperative device to spread the risks to the insurance company, I mean to the insurer, the system, to spread the risks over a number of persons who are insured against the risks. So that's why it's the cooperative device. You can say for with respect to the risks, all for one for all. So this principle may be used. So the principle to share the loss of each member of the society on the basis of probability of loss of their risks, and the method to provide the security against the insured. So that's why, so nowadays insurance is very vital, whether it may be the life insurance or the non-life insurance, I mean the general insurance. So these are the terminology, I mean the terms frequently used in insurance. First one is insurer, or you can say, I have already told, insurance company. The agency involved in insurance business is known as the insurer. So in India, okay, the life insurance, so many life insurance companies as well as so many the non-life insurance companies, I mean the general insurance companies. So they are providing the insurance policies to the policyholder. I mean to the insured. So friends, insured means what? You can say easily, it's the policyholder, the person who gets his property or her property or life is known as insured. Next, the insurance policy, it's a document. So friends, it's the contract or agreement which is put in writing is known as insurance policy. So then the premium, that is the consideration, friends, in the at the time of discussion of definition. So we have already discussed the consideration in return of which the insurer undertakes to make goods the loss or give a certain amount in the case of a life insurance known as premium. So risk, so it's a, what is this? It refers to the uncertainty about the loss. So risk, why I am talking about? So nowadays it's the risk always. So I mean आगे भी देखो रिक्स है, पीछे भी देखो रिक्स है, बाएं भी दाएं भी, everywhere the risk is there. So insurance is there to eliminate, I mean to avoid or to minimize the risks and uncertainties. So friends, these are the principles. So friends, we will discuss by citing the suitable example. So there are mainly 7 principles of insurance. So friends, we will discuss one by citing the suitable example. So first one, principles of utmost good faith. Both the insurer, I mean the insurance company, and the policyholder should display, I mean should disclose the utmost good faith towards each other towards the insurance contract. Otherwise the insurance contract will not be, that is the valid, I mean it's the illegal. So each party, I mean each party matlab here friends, here insurance company and the insured must, so it's a, that is, so disclose, so friends it's a disclose all material information to other party whether such information is asked or not. So there should not be any fraud or a non-disclosure or misrepresentation of material facts. So here friends, so example, in the case of life insurance, let's say the insured, I mean the policyholder must disclose the true age, whatever that, what is the age, details of the existing illness, about the that is the diseases. If he does not disclose the true facts while getting his or her life insured, the insurance company can avoid the contract. So here the policyholder must disclose about the age, about the, that is the salary, about the, that is the disease to the insurance company. Hence all important information and facts must be disclosed to each other before entering into insurance contract. So friends, I am hopeful that what is the meaning of principles of utmost good faith, particularly in the semester exam or board exam, in 1 mark question or 2 mark question you will get, or the long question or short question you will get, that is discuss the principles of insurance. So friends, I am hopeful that now clear. So second one, that is the principles of insurance. It's friends, a principle of insurable interest. So friends, what is this? Insurable interest means some pecuniary interest in the subject matter of contract of insurance. Okay. So friends, just wait by citing the suitable example. We will discuss, then you will be clear. So insurable interest is that interest when the policyholder get benefited by the existence of subject matter and loss if there is death or damage to the subject matter. Yes friends, so here one example, in life insurance a person cannot insure the life to a stranger. I mean a person, or we can make the life insurance policy to the unknown person or to a stranger, as he has no insurable interest, because we have no relation with the stranger or matlab unknown person. So interest in him, he can get insured the life himself and the person in whose life he has the pecuniary interest. So example, so in life insurance insurable interest exists the following cases: husband in the life of his wife and wife in the life of her husband. Similarly, a parents in the life of a child, if there is the pecuniary benefit derived from the life of a child. Similarly, creditor in the life of debtor. Similarly, employer in the life of employee. Similarly, surety in the life of principal debtor. So these are the very good example of principles of insurable interest. Friends, in the case of fire insurance, it must be present at the time of insurance, and at the time if the loss is a loss if subject matter. Similarly, in the case of marine insurance, it must be present at the time of loss of the subject matter. So friends, I am hopeful that now clear what is the matlab or meaning of the principles of insurable insurance. Next one friends, it's the principles of indemnity. Indemnity का मतलब क्या है friends? It's the compensation which is given by the insurance company to the policy holder. So this principle is applicable in the case of fire and marine insurance only. So it is not applicable in the case of that is the life, personal accident and the sickness insurance. So friends, you have to remember. So a contract of indemnity means that the insured, matlab that is the insurance company, in the case of loss against in the case of fire insurance or in the case of property insurance or in the case of that is the marine insurance, which the policy has been insured shall be paid actual cost of loss not exceeding the amount of insurance policy. Suppose the insurance amount is how much? It's 1 lakh. So maximum here that is the indemnity, the compensation will be given to the policyholder maximum 1 lakh. It's not more than 1 lakh because the insurance is not that is the gambling business. The purpose of contract of insurance is to place the insured in the same financial position as he was before the loss. Example, if a house is insured against the fire, rupees 1 lakh, it is burned down and found the expenditure is how much? It is 50,000 to restore it and its original condition. The insurer is liable to pay only how much? It's 50,000, not it's 1 lakh to the policyholder. Hence, all the contracts of insurance are the contract of indemnity except the life insurance. So here, next one friends, so principles of contribution, friends, we have already discussed that is the so it's the principles of contribution is a corollary to the doctrine of indemnity. So it is applied to any insurance which is a contract of indemnity. This principle does not apply in the case of life insurance. A particular property may be insured with 2 or more insurers, the insurance company, against the same risk. In such case, the insurer must share the burden of payment in proportion to the amount insured by each. So if one insurer pays the whole loss, then the insurer, the insurance company is entitled to contribution from the other insurer. So I friends, एक example लेके discussion करेंगे. If A gets his house insured against the rupees 10,000 with insurer X and for rupees 20,000 for Y. So here how many? So here A, the policyholder, has taken the insurance policy, fire insurance policy with 2 companies. So here A loss of rupees how much? That is the rupees 15,000 occurs. So X is liable to pay 5,000 and Y is pay rupees 10,000. So kitna hua? 10,000 plus 5,000, it's 15,000 because the loss is how much? It's 15,000. So A will get the insurance claim from both the X insurance company as well as from the Y insurance company. So here what happened? So what happened? If the whole amount of loss is paid by the Y insurance company, then the Y can recover the remaining 5,000 from the X insurance company. The liability of the X and Y will be determined under this principle. So friends, now hopefully that now what is the meaning of principles of contribution. So next one friends, the principles of subrogation. What is this friends? So the principles of subrogation is a corollary to the principles of indemnity. So this principle applies only to the fire and the marine insurance. According to this doctrine of or the principles of subrogation, after the insured is compensated for the loss caused by the damage to the property insured by him, the right of the ownership of such property passes to whom? To the insurance company after settling the claims of the insured of the covered loss. So आइए friends, example लेकर discussion करेंगे. If a furniture is insured rupees 2 lakh against the fire, it is burned down and the insurer pays the full value of कितना? Rupees 2 lakhs to the insured, I mean to the policyholder. Later the damaged furniture is sold kitna? Okay, 20,000. So here, so 20,000. So this amount will be okay taken by the insurance company. Here the insurer is entitled to receive the sum of rupees kitna 20,000. So now clear. So in this situation, whatever the scrap value will be available. So this is the property. I mean this will be the okay. This will be the claim by the insurance company, not the insured, I mean the policy holder. So next one, friends, so it's the principles of causa proxima. What is this, friends? So causa proxima means the proximate cause or cause which in a natural or unbroken series of events which are responsible for a loss or a damage. So the insurer is liable for the loss only when such loss is approximately caused by the peril insured against. The cause should be the proximate cause or cannot be a remote cause. So here, if the risk is if the risk insured the remote cause of loss, then the insurer company, I mean the insurance company is not bound to pay the compensation. आइए फ्रेंड एक एग्जाम्पल लेके डिस्कशन करेंगे. In marine insurance policy, goods were lost against the damage by sea water. So some rats on the boat made a hole in the bottom of the ship, causing the sea water to pour into the ship and damage the goods. So hence here the proximate cause of the loss is the sea water. So friends, sea water which is covered by the policy and the hole made by the rats is a remote cause. So therefore the insured can recover the damages from the insurance company. So friends, so what is the meaning of main cause and or the risk and the remote cause of loss? So friends, now you are clear. So it's friend, last but not least, the principles of mitigation of loss. So mitigation of loss means to minimize or to decrease or reduce the severity of a loss. So this is the principles of minimization the loss. So here an insured, I mean the policy holder, must take all reasonable care to reduce the loss. So friends, आइए एक एग्जाम्पल लेकर डिस्कशन करेंगे. इफ ए हाउस इज इंश्योर्ड अगेंस्ट द फायर एंड देयर इज द accidental fire, the owner must take all reasonable steps to keep the loss minimum or minimization of risk. So hence this principle explains that the insured should not become the careless and passive at the time of loss simply because his property is insured. The insured must act as like an or any uninsured prudent person. So friends, so these are all about today's discussion or in this video content. So friends, I hope that so you have enjoyed a lot. So friends, during the discussion, if any mismatch or gap you find, kindly give your valuable comment and suggestion in the comment section. So thanks a lot to all of you for watching this video content.